December. Barb, how are you feeling as we close out this year? We know it's been a good one, 27% plus gains on the S&P for the third year in a row of double-digit gains, but some defensive moves here to pay attention to in December. Where does that take us into next year?
Well, I think the overall market action is very bullish, and it really is reassuring because who knows, what can happen in those last 2 weeks. But I think the defensive action wasn't so much about a taste of the leadership to come, but more because you're up almost 30%, you're locking in profits. And I think a lot of the high flyers were obvious places to go. And when you're not sure about valuation, you go to the more defensive or the things that have lagged. So I think that was really more what was going on. And so I think we're going to see that into the new year. People looking more stock picking, looking for things that are relative bargains, if there is such a thing in this kind of market. So I think it's been very positive action this last few weeks, and I think we're going to continue into the new year.
Energy is on track to be the best performing sector of 2021, up nearly 48%. The sector boosted by a strong gain in oil prices. WTI crude on pace for its best year since 2009. Every stock in the S&P 500 energy sector is in the green for the year, but the top performers, Devon Energy, Marathon Oil, Diamondback Energy, they're all up more than 100%. Devon and Marathon are the two best performing stocks in the S&P 500 for the year. Barb, this was the most hated sector in the market. A real comeback. Does that continue?
Yeah, that's probably an understatement, Sarah. A hated sector. I mean, when you look at it's 3% weight in the S&P, it's underperformed the energy as a sector for 32 years. So to have this kind of performance is very interesting. And frankly, I have not been invested in oil, but I think it's going to continue. And for two reasons. One, we will see demand continue to expand as the economy reopens worldwide. And that's been a little bit of a stutter step, as we know. Every country has different ways of dealing with COVID. But also, there's some very interesting things happening on the supply side. And there's a few analysts out there talking about perhaps a structural change in supply side. And one of the big thing is that companies, I had not liked oil for a while, but part of it was that they were overinvesting, that they were spending more money, not getting the return on capital. Now they've got religion. After the shutdown last year, they've started to focus on the balance sheet, on free cash flow, delevering. And there's been several companies, included two of the big integrateds, Exxon and Chevron, who've committed to make it their first priority to return capital to shareholders, primarily through dividend and share buybacks. But that's a real sea change, which means you are not going to be investing in projects that you cannot see are going to be profitable. And that's going to cut out a lot of projects.